What's going on, guys? So today's video is going to be covering the 2018 financial results for Glanbia. Glanbia is a global nutrition company. They're based out of Ireland. If the name doesn't ring a bell, I promise it will when I name some of the brands within their portfolio. I've been following Glanbia for the last few years. Being that they're publicly traded, it's a great kind of peek into the biggest sports nutrition, nutritional supplement portfolio in the world. And usually they give you a lot of really good nuggets on kind of where they see some of the macro trends going, some of the market challenges. And if you guys have watched some of my kind of financial recap, earnings recap videos before, you guys know I love the end of year reports because these usually have the most information. They usually have the most nuggets in there. The companies put together a pretty good presentation because these are also usually what they have at their yearly kind of investor conferences or meetings like that. So found some really good stuff for you guys. I want to make sure I give you guys all those insights here on this video. But before I get into all that, if you guys want to help me out a ton, all I ask is if you guys hit the thumbs up button. It's just right down below from where you guys are watching this video. It doesn't cost you guys anything other than a few seconds of your time. That really helps me out a ton with YouTube, helps them understand that you guys are getting a ton of value out of these videos. But if we look at Glanbia's revenue for 2018, and they report in euros. So I did some conversions into US dollars just because it's easier. Most of my viewers are from the United States, so it's just easier for me to talk in USD over the euro. But I think the conversion rate that I used, 1.12 US dollars to euros in this situation. Obviously, you guys know currency fluctuates all the time. So when you're watching this, these numbers could be a little bit skewed, but not in a material fashion. So their total revenue was $2.67 billion in 2018. And this is from wholly owned operations. So they do also have some joint ventures and different things that I'm not going to really be talking about, but this is just wholly owned operations. This is actually up 4% year over year. But if you want to take a look at the earnings report, you might notice that the revenue numbers are actually pretty much the same. The 4% is actually because they take a constant currency. Being that they're a multinational company and they have a bunch of different currencies they deal with, there's always fluctuations in terms of when they convert that back or how they flow that through their different entities. So if we take a constant currency look, they did grow 4%. And that's how I'm going to be always throwing my numbers out, is from a constant currency standpoint. So we take the currency fluctuations out of the picture. So like I said at the beginning of the video, you guys probably remember, you probably know some of the brands that are in the Glanbia portfolio. Glanbia's revenue is actually kind of 50-50 at this point between two kind of divisions within their company. You have kind of the first one is what they call Glanbia Nutritionals. This division has their U.S. cheese operations. They also have nutritional solutions, a lot of the raw material innovations. This is going to be the ingredient side of Glanbia. This is where they own a lot of the supply chain, where they have a huge competitive advantage in the market. So that's that division. It does about $1.4 billion. This actually was just up about a fraction of percentage, so it was pretty flat. Most of their growth came from their other side, their other kind of 50% of their revenue. And that's where I kind of focus the majority of my time when I look at their earnings, and where I'm going to be focusing a lot of the time on this video. And that's Glanbia Performance Nutrition. This is where all the sports nutrition, nutritional supplement, health and wellness brands are at that you guys know. This is Optimum Nutrition. This is BSN. This is American Bodybuilding. This is Amazing Grass, ThinkThin, and a newly acquired Slim Fast. Those are kind of the US brands that obviously sell internationally as well. But and then they also kind of have some international focused brands in NutriAmino, and then a direct-to-consumer site, Body and Fit, that really helps them with some of their digital aspirations outside of the US. And the Glanbia Performance Nutrition section, this is where they saw the majority of their growth. This is where they have higher margins at in their business. They actually had about a 9.5% growth year over year in the Glanbia Performance Nutrition portfolio. And in that kind of $1.2, $1.3 billion in revenue they did within the Performance Nutrition portfolio, they saw about $194 million in profit. That comes out to about a 15% EBITDA. That's earnings before interest, taxes, depreciation, amortization. That's basically their net profit margin, if you want to think about it simplistically. This portfolio saw some volume increase, about 9%. They also saw about a 4.5% increase from some of the acquisitions that they did. But they saw about a 4% retraction in terms of the pricing that they could offer. I didn't necessarily break down individual week by week type of CPG earnings like I did last quarter, but if you remember from last quarter, if you guys watched any of those videos, I was talking a lot about who eats the price fluctuations right now within some of the trade war issues. So this is kind of what happened with Glanbia over the year. They kind of ate most of those things, I believe, because they own a lot of the supply chain. They also have a lot of margin in the products that they're working within currently. So one of the good things that you see within the annual reports on Glanbia Performance Nutrition is that they actually break down a lot of like the ratios of their business on that portfolio. If we look at just like domestic to international, they're doing 61% of their business domestically in the US, 39% of that is international. If you look at just kind of like I think they put between 2015 and 2018, kind of what was the change. And you'll notice that they actually had more international growth. The international sales in comparison to domestic sales did grow. So I'm focusing or seeing opportunity in the markets of, the 120 plus countries that they do sell into. If you look at just like a sales channel perspective, they do 26% of their business online, 26% of their business in specialty retailers, 25% of their business in distribution, and then now 21% in the food, drug, mass convenience channels. And over that kind of same period, I was talking about 2015 to 2018, they did see a growth in online. They saw a retraction in specialty and distribution, but the biggest kind of material change was in their focus of food, drug, mass convenience. There was a really good growth trend that happened there. That's where they're focusing a lot of their product innovations. I'll talk a little bit more about that at the end of the video, but this is one of the macro trends that Glanbia is really kind of looking at and making sure that they focus from a sales channel perspective. From the product side, they do 63% of their business through protein products, 14% ready to eat, that's like protein bars. 5% of their business is from ready to drink, beverage products. 5% of their business is through caps and pills. And then 14% is through like energy products, pre-workout. Most of those categories were pretty consistent over that same period of time, the 2015 to 2018. The big kind of change was with the ready to eat section. That probably goes right in line with some of their growth within the food, drug, mass convenience section. So those kind of things line up pretty well in terms of what you'd expect with their focuses in certain sales channels. So as I mentioned before, kind of the major transaction this year for the performance nutrition portfolio was SlimFast. They bought SlimFast for $350 million in kind of the middle of quarter four. And they're saying that's going to add about $250 million in revenue ongoing. If it grows a little bit more, obviously they're going to get some benefit off of that. The SlimFast name in general is a play to get further involved in kind of the weight management section. Also, it really had strongholds in the food, drug, mass convenience, has the ability to create synergies, a bunch of different things that Glanbia sees as opportunities with picking up the SlimFast name. They also picked it up on, kind of a garage sale price in terms of where the valuations were for the business over the last decade or two. So, they're buying a depressed legacy brand asset. Obviously, they believe they have the know-how to change that trajectory a little bit, or at least extract a lot of value out of that capital. So we'll kind of see how that looks in 2019 when I'm looking at some of their next earnings report. As I kind of mentioned, Glanbia does kind of move into some of their macro trend analysis. They kind of break down some different things that they're seeing in the market. I would say that if you guys watch a ton of my videos or pay attention to a lot of my posts, a lot of the things that they're saying are not anything new to you. These are things that I talk about very frequently, things that I'm always harping on to make sure that people are paying attention to. But one, they're just kind of mentioning or commenting on just the health and wellness market overall. Very healthy market, growing 6 to 7% year over year. They think they're positioned very well. I agree. They are extremely well positioned, regardless if they're a legacy brand or not. They have a lot of competitive advantages over anybody else in these industries. It's a matter of if they're able to utilize those competitive advantages in a way that just further allows them to be the market leader. They're also commenting about on-the-go beverages and foods. You guys know I talk a lot about ready to eat, ready to drink, and just how sports nutrition and the idea of what is sports nutrition is changing. to more functional foods and functional beverages. But they also kind of went a little bit further, made some commentary about how the US market is extremely competitive, especially in the ready to eat category. Totally agree with that. If you guys do any shopping for protein bars and items similar to that, you guys can see at any grocery store, convenience store, mass retailer, specialty retailer, online, anywhere like that, you're seeing a ton of different protein bar and protein type products that are similar to that. So Glanbia is making a commentary that they see kind of the same thing, and though they're positioned very well in this, they think there's going to be a little bit of headwinds that happen. They're also talking about digitally connected consumers. We all know how aggressive the online channel is growing with nutritional supplements. I believe at this point it's about 50-50 in terms of the overall revenue in the US with the vitamins, minerals, and supplements category. So a lot of the business is going online. I think 35% growth year over year online. So that ratio is going to flip next year. You're going to have more online sales than you are going to have in physical retailers. So consumers are more connected. They're buying products online. They have the ability to research and make quick switches in terms of their brand consumption or information consumption as quick of a click of a mouse. So there's really concern from any brand, regardless of small or big, about how they consistently keep their customers within their portfolio, their ecosystem. So Glanbia is making a note about that. They are really investing in a lot of their direct-to-consumer, a lot of their digital content. I think you'll continuously see that Glanbia putting money, putting effort, putting acquisitions into that particular area of business throughout the next couple of years. And they also made a comment just around clean labeling. You guys know I talked a lot about clean labels in terms of both understanding like transparency of that label, what's in the product. That's a trend within sports nutrition, nutritional supplements, but also what are the ingredients that are in there? Natural ingredients, natural colors, no artificial sweeteners, different things like that are starting to really gain some momentum in the market. Sports nutrition especially has been slow to adopt a lot of those things comparable to other kind of functional categories. But being that Glanbia is focused a lot on the ready to eat and ready to drink kind of categories, they have to be well aware of where food and beverage trends are going as well. So they're making a comment on that because they definitely see that they're going to have to make continuous improvements in that area to make sure that they stay on trend with some of these macro things going on in the market. Not really a macro trend, but something that I believe will continuously happen with Glanbia, and one of their main competitive advantages is they have their size. They have the ability, they turn a lot of cash, they make money. They're able to go out and acquire different brands. They're able to grow by acquisition, which is one of the kind of main kind of cornerstones of a lot of the consumer packaged goods companies' legacy portfolios at this point. But Glanbia does have that ability. I believe that they're going to continuously do that over 2019. I did make some commentary, I think, in a video about I think they will at least purchase one other brand in 2019. We'll see if that happens. With that, even if we look at the other side, and I think they'll acquire some businesses on this side as well, the area that I didn't talk about, like the Glanbia nutritional section, they did announce a acquisition formally on their earnings report. They did purchase Watson. And Watson is like a non-dairy ingredients business. I think they purchased them for about $89 million. And the company made, I think, over $100 million in 2018. So this business is producing revenue. Watson particularly focuses on categories that Glanbia is focusing on with food ingredients. A lot of their clientele innovation, pipeline, things like that are also focused on personal care, which could give us a little bit of an insight about where Glanbia maybe is going to look in the future. Functional personal care, functional beauty, those types of areas are emerging. They are still kind of a little bit early on, but Glanbia might be seeing that as an opportunity to create some innovations on the pipeline on the ingredient side to help people that maybe are a little bit more in touch with those trends. They can supply those ingredients for those companies, make a lot more revenue from this acquisition. So we'll see what happens with that necessarily. But I'm going to end this video here. If you guys got some enjoyment out of this video, make sure you guys hit the thumbs up button. If you guys are new to this channel or you have not done this yet, make sure you guys do subscribe. That ensures you guys see all the videos. I do produce a few videos every week, so make sure you guys are always first to know about those things by subscribing to this YouTube channel. But Just want to thank you guys one last time for giving me some of your time. Hopefully, I gave you some value in return for the time you gave me, and I'll see you guys in the next video.